Hello, Five Finance family. I am super excited that you decided to join me for another episode of the Tax Takeover. I will be your tax strategist for the duration of this show, and you're probably wondering what qualifies me as your resident tax expert. Well, I'm glad that you asked. So, allow me to formally introduce myself to some and reintroduce myself to others. My name is Samara Andrews, and I am an accountant. I am also a finance analyst by trade with over 18 years of experience in corporate America, working for Fortune 500 and Fortune 100 organizations. And not to mention, I also hold my MBA with a finance focus. Y'all, I love finance so much, I almost said it again. But I hold my MBA with a finance focus, and most importantly, I am an enrolled agent with the Internal Revenue Service. Okay, so what that means is that I have an in depth understanding of the tax code, and we leverage the tax code for the benefits of our clients. So that means individual taxpayers and business owners alike. All right, so that's why I'm your tax expert. That's why I'm your tax strategist. And that's why we're going to be talking about tax free income. Right. So I know you're excited. So please make sure that you get your pens and your pads and follow along. And please ask questions in the comment section as we go along because I'm going to be giving you a lot of information. So try to keep up. Okay. So the first stream of tax free income that we're going to be talking about is life insurance proceeds. Okay. So if you are a beneficiary and you receive life insurance benefits due to someone dying, then those proceeds should be coming to you tax free. Now, there are some caveats, okay? So, if that life insurance policy earned interest, you may have to pay taxes on any interest that was earned, okay? If that life insurance was not given to you through a benefit, and you say, "Hey, I just want to take ownership of it," then that may also be a taxable event. And before I go on any further, I forgot to say everything that I'm talking about tonight is coming from the Internal Revenue Service's publication 525. So, as I'm walking through all of these, feel free to gut check me at a later time. Read up on publication 525 so that you can understand all of the taxable and tax free income as it pertains to you as a taxpayer and as a business owner. All right, so the first one is out of the way. All right, the second one are your Roth IRA distributions. All right, so if you contributed to a Roth IRA account, then you more than likely made those contributions with tax dollars. So, if you made those contributions with tax dollars, then when you receive the distributions, you shouldn't be taxed on them because then you would be double taxed. Now, there are some exceptions, or I should say, some qualifications that go along with this. In order for there not to be a taxable event, you have to be fully vested, meaning that you have had to own that instrument for at least 5 years, okay, or more. And then you are only going to receive the distributions that are made from the contributions that you gave, right? So the distributions are tax free up to the contributions that you made into that instrument, meaning any interest that was earned on those contributions, the interest will be taxed, okay? Because that money was never taxed. Okay, so I hope y'all follow along. So you can receive the distributions tax free as long as they come from your contributions that were made and that you were fully vested into that instrument, meaning that you had it for 5 years or more. All right. The third stream of tax free income that we're going to be talking about are child support payments. So, if you are receiving child support payments, court ordered child support payments, those payments are issued to you tax free. If you are receiving court ordered alimony and your divorce decree was issued after December 31st, 2018, gut check me, publication 525, then you should be receiving those court ordered alimony payments tax free. Okay, so again, make sure that that divorce decree was issued after December 31st, 2018. right? The another form of tax free income is bond interest. So, if you own, and I've talked about this before, if you own a government or some kind of state, local government bond, so it can be a federal or a local government bond, and you earn interest on that bond, then the interest could be tax free. It may be tax free. Now, you still will have to report that interest. So I want to make sure you understand that you still should be reporting that interest that is earned on your tax return, on your personal tax return. Please make sure you report the interest. However, you reporting the interest doesn't mean that you will be taxed for sure on that interest. That interest may still be considered tax free. Now, there are some qualifications that you have to meet in order for that interest to be tax free, and you can definitely read into that on publication 525. I'm not going to go into detail on that one because it is a lot, and I want to make sure that you have a good solid understanding. I would also advise you, when you are looking at investments in the government bond section, to connect with a professional to make sure that you are getting a bond that is going to yield you tax-free interest. All right. The next form of tax free income is military pay or veteran disability pay, and only certain types of military pay. So, the one that I'm going to highlight tonight is combat zone pay. So, if you receive any military pay while you are in a combat zone, then those payments could be tax free. All right, so there's some other stipulations that go along with that concerning like time periods, so lengths of time. So make sure that you have a good understanding of that according to publication 525. But if you receive that combat zone pay, then that income may be considered tax free. If you are a disabled vet, any disability payments that you are receiving on a monthly basis are tax free, which is why you do not receive a 1099-R or a 1099 anything at the end of the year. All right. And also, thank you for your service. Okay. And so, moving on, the next stream of tax free income is canceled debt. Now, this is a big one because most people don't know this. Now, you will receive a 1099 miscellaneous usually. And the 1099 miscellaneous says, yes, we cancel this debt, but since we canceled this debt, we are reporting this to you now as income, right? So if you think about what happened in the crisis in 2008, 2000, and probably through 2010, when the market crashed, right? There were a lot of people who had their homes foreclosed on. And so, because they had their homes foreclosed on, the bank said, okay, fine, we can't collect money from them, but guess what? We are going to excuse that debt, but we're going to make them report it as income on their tax return. So, you would have received the 1099 miscellaneous. And the way that you do not have to pay taxes on this income is if you prove yourself to be insolvent. And the word of tonight is insolvent. So, insolvent means that you actually owe more than you own. Okay. So, do a personal balance sheet statement for yourself, Five Finance family. List all of your assets, list all of your debt. If you owe more money than you own, you are insolvent. So, if you were to receive a canceled debt, 1099 miscellaneous, and it says canceled debt, and it has income in there, you will not have to report that income as taxable income if you are deemed insolvent. Now, you still will put it on your tax return. It's just that this income will not be taxed if you are deemed to be insolvent. Okay? All right, so I want to make sure that that's specified, be very specific with y'all. Because again, I'm giving you information according to publication 525 of the Internal Revenue Service. All right. So the next stream of income that we're going to be talking about that you can receive tax-free are lawsuit settlements. So lawsuit settlements that are received by a person because they were discriminated against or they were physically injured These lawsuit payouts may be considered tax free. And so you can find out more information about the lawsuit settlements through the IRC Section 104. So the Internal Revenue Code Section 104 will give you an in-depth understanding of what type of lawsuit settlements should be received as tax-free income, right? So again, it's a part of Publication 525, but it gives you a more in-depth understanding of what constitutes as tax-free income if you refer to the Internal Revenue Service Code Section 104. All right, we'll make sure I got that right. All right, so then we have another stream of tax-free income. I think we're at number 9, right? Yes, we are at number 9. So this is your basic distributions from your S corp. So business owners, if you are an S corporation, right, meaning that you have made an election with the Internal Revenue Service to be considered an S corp, a pass-through entity, then any distributions that you are receiving from your basis contributions should be considered tax-free. All right, so what does that mean? Think about it as you contributing to a savings account. When you take your money from your checking account and you push it to your savings account, it doesn't create a taxable event. Yes? Yes. So it's the same thing. Now you're investing in your business. And if you take that investment that you made into your business back out of your business, should not create a taxable event. Now, this is why it's important for you to work with a tax professional so that you can properly track your basis account so you can make sure that you are making tax-free distributions. Okay? Excuse me. So again, the distributions made from your basis, if you're an S corp owner, are tax-free income. And then last but definitely not least, this is one that a lot of taxpayers take advantage of. And this is the gains from the sale of your home. Okay, your main home. Make sure that I say that. So, any gains that you receive from the sale of your main home may be tax free. Now, there are some qualifications that you have to meet. One being if you are a single tax filer, right? So your filing status is single, then you are able to receive gains from the sale of your home up to $250,000 and that not be taxed, okay? If you are married filing jointly, then you can receive gains up to $500,000 and it not be taxed, okay? So again, there's a lot of ways that you can receive tax-free income. Y'all, I only covered 10, okay? But again, Publication 525 has a lot of taxable income and tax-free income. So I encourage you to read it. And then I encourage you to connect with a tax professional like myself so that we can definitely have an in-depth understanding and I can guide you on how to navigate through these waters come tax season, right? And throughout the year, because we also offer tax planning services as well, right? So if you like the information that we have tonight, that we have shared with you tonight, definitely continue to like, subscribe, and share, right? And visit our website. We would love to connect with you on a one-on-one basis. So you can visit us at fivefinance.com. You can go to that booking tab and you can definitely book a consultation with us, right? But definitely tune in for next week. If you liked what you heard tonight, we're going to be doing this all season long, y'all. So we're going to do a deep dive into this tax code. We're going to take it little by little because the tax code is massive. But we want to make sure that we are an advocate for you as the taxpayer, okay? So I hope that this was helpful. Thank you for all of your comments in the comment section. We are definitely going to make sure that we do any follow-up if you want more information. So if you're watching this in replay, make sure that you hit replay, right? If you were live, we saw you in the comments and we appreciate you, right? So until next time, Five Finance family, you all have a blessed and wonderful Tuesday evening. And thank you for tuning in to the Tax Takeover. See y'all soon. Bye.